Donald Trump nominates Kevin Warsh as Fed chair. What happens to interest rates, mortgages, and stocks? Ladies and gentlemen, a huge development shaking global financial markets. Donald Trump has just nominated Kevin Warsh to replace Jerome Powell as the chairman of the U.S. Federal Reserve. And Trump didn't hold back. He called Warsh one of the greatest and hinted that this change could bring a completely new direction to America's monetary policy. Now the big questions everyone is asking. Are interest rates about to fall faster? Will mortgages finally become cheaper? Is the stock market heading for another rally? And most importantly, who really benefits and who could lose? Today, we break this down step by step in simple terms. No finance degree needed. Segment 1. Why this nomination matters. First, let's understand why this is such a big deal. The Federal Reserve is the most powerful central bank in the world. Its decisions don't just affect America, they impact global markets, currencies, inflation worldwide, even countries like Pakistan, India, and China. At the center of the Fed is the chairman, the person who decides how high interest rates go, when rates are cut, how aggressive inflation control will be. Jerome Powell, the current Fed chair, is known for being cautious, data-driven, and sometimes slow. Donald Trump, however, has always wanted lower interest rates, faster economic growth, stronger stock markets. That's where Kevin Warsh comes in. Segment 2. Who is Kevin Warsh? 3 minutes. So who exactly is Kevin Warsh? Kevin Warsh is not new to the Federal Reserve System. He previously served as a Fed governor. He worked during the 2008 financial crisis. He is known as pro-growth and market-friendly. Unlike Powell, Warsh has often criticized keeping rates too high for too long, over-tightening monetary policy, slowing down economic momentum. In simple words, Warsh prefers growth over restriction. That's why Trump likes him. Trump believes Warsh will cut rates earlier, support businesses, push asset markets higher. Segment 3. Trump versus Powell, the real conflict. To understand this move, we need to look at Trump's history with Jerome Powell. Trump appointed Powell himself, but later turned into his biggest critic. Trump repeatedly accused Powell of keeping rates too high, hurting economic growth, blocking his America First agenda. Trump wanted cheap borrowing, easy money, strong stock markets before elections. Powell resisted political pressure. Kevin Warsh, on the other hand, is seen as more aligned with Trump's economic vision, less resistant to aggressive easing, more willing to act fast. So this nomination is not just economic, it's deeply political. Segment 4. Will interest rates fall faster? Now let's answer the biggest question. Will interest rates come down faster under Kevin Warsh? Short answer, very likely. Here's why. Kevin Warsh believes that inflation should be controlled, but not at the cost of growth. Central banks sometimes overreact. High rates for too long can cause recessions if Warsh becomes Fed chair. Rate cuts could come earlier. Cuts could be deeper. Monetary policy may turn more aggressive. Markets love that because lower rates mean cheaper loans, higher spending, more investment, faster growth. But there's a risk too, and we'll come to that. Segment 5. What happens to mortgages and housing? Let's talk about mortgages because this affects ordinary people directly. Right now, mortgage rates are high. Home affordability is low. Many buyers are waiting on the sidelines. If interest rates fall faster, mortgage rates will drop. Monthly payments will become cheaper. Housing demand will increase. This could revive the housing market, push home prices up again, help builders and real estate stocks. Good news for homebuyers, real estate investors, construction sector. Bad news for people hoping for a housing crash. Renters facing rising rents. Segment 6. Stock market reaction. Boom or bubble? Now the stock market, the favorite topic of investors. Lower interest rates usually mean stocks go up, growth companies benefit, tech stocks rally, risk appetite increases. Under Kevin Warsh, markets may expect easy money, valuations could expand, indices like S&P 500 and NASDAQ could surge. That's why Trump is excited. But here's the danger. If rates fall too fast, it can fuel asset bubbles, create excessive speculation, delay necessary economic corrections, short-term boom, long-term risk. This is the classic debate, growth versus stability. Segment 7, inflation, the hidden risk. Now let's talk about what everyone is afraid of. Inflation, lower rates mean more money in the system, higher demand, potential price increases. If Warsh cuts rates aggressively while inflation is still alive, inflation could reaccelerate, cost of living could rise. The Fed may lose credibility. This is why critics are worried. They fear that political pressure may influence policy. Long-term stability may be sacrificed. The Fed's independence could weaken. This is not just an American issue. Global markets would feel it. Segment 8, global impact. A softer Fed policy means weaker US dollar, capital flows into emerging markets, relief for countries with dollar debt. Countries like Pakistan, Turkey, Argentina could see currency stability, lower debt pressure, improved investor sentiment. So this decision doesn't stay in Washington. It travels worldwide. Conclusion. So let's wrap this up. Donald Trump's nomination of Kevin Warsh is not just a personnel change. It's a signal that rate cuts may come faster. Markets may get support. Growth could be prioritized, but also a warning that inflation risks remain. Asset bubbles could grow. Political influence may increase. The real question is not, will markets go up? The real question is, at what cost? Now I want to ask you, do you think faster rate cuts are good? Should the Fed focus on growth or inflation? Is Kevin Warsh the right choice? Comment below and let's discuss. If you found this breakdown useful, like, share, and subscribe for more deep but simple analysis.